Hi, everyone. I'm Lana Zach. U.S. stocks finished higher on Thursday, ending a historic week of gains. The S&P 500 recorded the biggest week of gains in more than 4 decades, climbing over 12%. Meanwhile, the Nasdaq also marked its biggest week of gains since 2009. The stock market rallied as the Federal Reserve is announcing a new $2.3 trillion relief package aimed at supporting the economy during the coronavirus pandemic. For more on this, let's bring in Akiko Fujita. She's an anchor and reporter for Yahoo Finance. Hi, Akiko.
Hi, Lana. Good to see you.
It's good to see you, too. Thanks for joining us. So stocks have been recovering recently despite historic unemployment in the United States. In economic terms, this is unusual, to say the least. What does this really say about what investors think is likely going to happen on the other side of this pandemic?
Yeah, you know, it's interesting what happened today. You mentioned where the stocks ended up. That was unusual partly because we also saw that really staggering number this morning, another 6.6 million unemployment claims. You total the last 3 weeks, we're talking about upwards of 17 million jobs that are lost. But it's exactly what you pointed to in terms of the Federal Reserve's actions that have given investors confidence. Essentially what you saw today was an additional $2.3 trillion injected into the Main Street business lending program. And that essentially means that the Fed is going to add additional funding or lending for not just small businesses, mid-sized businesses, but also we saw the Fed extend its lending today to cities, municipalities, and local government. So this is the kind of line we have not seen the Fed step over even during the financial crisis. So the reason you're seeing some of this optimism in the market is investors are seeing the Fed is going to throw everything they can right now to help the economy recover at the end of that crisis. You total that with the fiscal measures we've seen out of Washington, and there's certainly some sentiment among investors that things may not last as long in terms of the economic downturn as some projections have cited.
Well, sure, certainly it shows a willingness on the part of the government to try and support the U.S. economy. But I'm wondering, too, at what point does it just start to concern investors, economists, about inflation, about the government printing money and trying to supplant the economy when everybody's staying home?
Yeah, I mean, that's a big concern right now if you look at sort of the standard economic models, right? But what we have heard from the Fed Chair Jay Powell, as well as other economists, is that you just can't use the standard economic models right now to look at what is waiting on the other end of all of these stay-at-home measures, essentially because what you've got right now is an economic stop. And we have never seen something like this before. And so I'm not so sure that the inflation question is a big concern. I will tell you that there does seem to be a bit of a disconnect between what we're hearing economists say and then what we're actually hearing on Main Street. The most dire projections we got from JP Morgan today talking about a potential 40% contraction in the second quarter. That's certainly a significant downturn. But even if you look at the unemployment claims that are coming out, 6.6 million is certainly a significant number, but you're also hearing these stories of those workers who have lost their jobs who can't get through to these numbers to even file their unemployment claims. So that seems to suggest that the total number at the end of all of this is going to be much more significant than what the official data suggests right now.
So, Akiko, let's move from the macroeconomic to really microeconomics and actually individual finances, personal finances. One of the most vulnerable populations to the coronavirus are retirees, and they've been doubly hit by also seeing a drop in their retirement savings, a hit to their 401ks. What does today's rally really mean to them?
I think you want to look at this in the bigger term. And this is one of those questions we've gotten repeatedly since we've seen this volatility pick up in the markets, which is what should I do with my 401k? And that really is a big question mark and depends on what your retirement outlook is or timeline is. You talk about those who are expected to retire within the next 5 to 10 years. It's a big concern when you look at the downturn that we've seen in the stocks. You know, the common advice here would be to just not panic right away. Look at what your options are with your employer. There's one more thing, though, that's worth mentioning right now, which is what we've seen with this CARES Act, the rescue package that was passed by Congress last week. And in it, there is a provision that allows those who may not, be a few years out from retirement, but may want to tap into their 401k to be able to withdraw as much as $10,000 without a fine. Before all of this, there would have been a 10% fine. But there are some provisions that are added in there for those who may not be immediately of retirement age, but may be short of cash, who are looking at their 401ks to say, maybe that's some money that I can tap into.
Some potentially good news for people who might need that right now. Well, Akiko, as we've been talking about the efforts being made in this country by Democrats and Republicans to prop up the U.S. economy, support small businesses, and help American workers, I'm reminded, of course, that we are in a globally interconnected economy. So can you tell our viewers a little bit more about what's happening in global markets and how that might affect the U.S. economy after we get back to normal?
Yeah, what we've seen globally is this effort, just like the U.S., to really try and stimulate the economy. Rescue is probably a more accurate word. So $2 trillion in the U.S. has by far been the most significant amount we've seen. But over in Japan, we've seen roughly $1 trillion stimulus package that was passed by Prime Minister Shinzo Abe. Over in Europe, a lot of those countries that were hit hard by this virus, they've also floated some significant stimulus measures. But one of the things I would point to look for in the months ahead, not just within the markets, but how we start to see things move globally, is sort of this decoupling that we've heard a lot of people talk about even before all of this happened. Increasingly, a lot of companies may be considering, maybe I don't need that office over in China or Europe. Maybe we bring people a little closer to home. Maybe we bring some of the supply chains closer to home, because what we've learned from this virus is that a lot of companies were not equipped for any kind of complete border closure, which is what we've seen over the last several months. So I think there's certainly a lot of numbers to look for. In the immediate term, though, we are going to start earnings season next week. Things are going to start to pick up, at least here in the U.S. So we're going to get a little more concrete numbers coming from these companies to see what exactly has been the hit as a result of the last month or so of this shutdown. And I think you're going to start to see the markets move on the back of that as well.
One last question for you, Akiko. As we were discussing earlier, the current environment really challenges economic theories. But I'm wondering now, should we be thinking of the United States as being in a recession? I've been reading a lot about comparisons between 2008 and the recession that we're in right now, but I'm not even sure if that word really applies.
So let's talk about the definition of a recession, which is essentially 2 consecutive quarters of contraction. Now, what we've heard from a lot of economists is, say that we're probably in a recession is because the numbers for GDP growth in this quarter, the first quarter, or the quarter that ended last week, is not going to be out until the end of April. And then the second quarter, which is what we've heard a lot of economists say where the real damage is going to be, we're not going to get that number until July. So it's tough to go with the official definition of the recession. But when you look at 17 million roughly jobs lost, and you look at the kind of stoppage that we've seen, it's tough to argue that we are not already in a recession. We're just not getting that official word yet because the data isn't out.
Thank you very much, Akiko Fujita. You always bring a little bit more sense to this senseless world. Appreciate it.